So guys, welcome back to Finimal Spirits. And as we said, Finimal Spirits is all about animal spirits in financial markets. And someday we hope to bring in live animals and live spirits, right? But for now, it's just us with some animal videos which help explain some financial concepts, right?
Yeah.
And as we said, don't take this as financial advice, talk to your advisors, do your own research. This is our research for ourselves,
Yeah.
which we are generous enough to share.
So if it helps you guys, I mean that's wonderful. Happy investing. So yeah, let's start. I think in our last video we discussed about global economic trends.
Yes.
Okay, in 2022 and how it's going to pan out in 2023.
Yes.
And we did split it into developed markets.
Yeah.
More so, we discussed on US.
Yeah, right.
And then we did touch upon emerging markets and its challenges, and then we did say that we discussed in the next video,
Sure.
which we would to some extent touch in this this video as well. So we discussed about US bonds, inflation, we touch upon tech sector, dollar index,
Semiconductors,
yeah,
currencies.
yeah, and to some extent we did talk about Europe.
Right.
So let's see how our last predictions have panned out now.
Let's face it, right? We did not make any prediction or any research for 1 week or 2 weeks.
Yeah.
Right.
The hypothesis still holds good. What means?
Correct.
Yeah.
So the time horizon for our research was like 1, 2, 3, 5 years.
Correct.
Right.
Yeah.
And I think that still eminently holds. Right. If anything, bonds have become slightly cheaper. Tech sector has become slightly cheaper. And as Warren Buffett puts it, right, my job is to buy something worth $1.50. If it goes to 25 cents, I'm happier. Right? So if you haven't acted, you've got a better entry point. Right? So that's my take. Let's pull up some charts of US Treasury ETFs, that is TLT, the tech sector ETF, that is QQQ, and stuff.
Right. Yeah.
Right. I mean, you can even play this with derivatives and stuff if you understand the risks involved in leverage.
Correct. Yeah.
I mean, you can even do leverage ETFs and stuff.
Correct.
But again, it's not easy to understand the risks. Number one. Number two, I personally do not recommend any leverage unless you have a beta of 0.
Yeah.
I mean, across your portfolio of strategies, trading, investing, across asset classes, long, short. And trust me, it's not easy to do it in a long only mode.
Correct.
It's nearly impossible.
Right.
Anyway, so let's
pull up
look at
those
the charts and explain the stuff.
Yeah, sure.
Right. All right. So here's how, like we said, here's how we're gonna play this, right? I mean, you make your own decisions. You can use the same instruments. You can use futures, options, leveraged ETFs. It's all up to you, right? But please do understand the risks of leverage, and if you do use it, make sure you're extremely well diversified, and it's not gonna hurt you more than you can take.
Yes.
Right. So look at QQQ, right? So if you look at it, the current decline, this kind of decline has only been seen 3 or 4 times in the past, right? And every time it has bounced back relatively quickly. It took a long time, during the dot-com crash, but those valuations are nowhere as realistic as they are now. So that's about QQQ. Let's move on to TLT.
Right. Okay.
Right. So this perhaps is the safest asset class by the book. I mean, not that, I endorse the view, but this is considered the safest asset class, or at least one of the safest asset classes. And look at the extent of decline from its peak or from its trend, right? That we believe is the extent of undervaluation relative to its own history, right? And the chart should show you that,
Yeah.
it's probably undervalued by anywhere from 35 to 40%.
Yeah.
And that's probably the kind of upside that's available to make if you have the patience of 2, 3, 4, 5 years, right? And that's not a bad deal.
That's right. It
Right.
dates back to 2013-14 kind of value.
Let's ask this question, right? Does it still make sense after the Silicon Valley Bank crash and another bank signature, whatever, Credit Suisse in trouble? I mean, Credit Suisse has been in trouble for a couple of years, right? In my humble opinion, again, this is something that makes this asset class even more attractive.
Absolutely.
I mean, it may have something to do with, the undervaluation has something to do with the crashes of these banks. But that being said, the crash will make it more attractive because it's a safe haven asset class.
Yeah.
That's about it.
Yeah, that's wonderful.
Fantastic. So we'll do video on bank crashes, bond, Silicon Valley Bank, all these related concepts in the near future.
Yes.
Okay, so that gives a pretty good explanation on how
Right.
we played the US market.
Right.
So now let's look at European inflation.
Sure.
So how do you think?
So last week we actually made a prediction that European inflation will finally follow the US trajectory.
Right.
Right. And that's turned out to be, I mean, that's already panning out.
Right.
So if you look at the UK inflation, right, that was like already in double digits.
Correct.
Now that's come back to single digits.
Right.
And that's a good sign.
Right.
And if you look at it month on month, like December to Jan, there's been a deflation
Right.
in the UK.
Yeah.
And there are enough drivers. I mean, look at the commodity index, look at the natural gas prices, which goes into heating across Europe.
Yeah.
Right?
Yeah.
Look at crude.
Yeah.
Right? So, I all these four things, they give me a picture that, European inflation is indeed headed south.
Yeah.
You're right.
Right. So, I mean, how do you think the currencies, the euros and your
Okay, so this is the way to play this.
Yeah.
Right? The way to play this is to, going long on pounds and euros.
Yeah.
Right? For the long term, again, I say 2, 3, 5 years.
Right.
I mean, this is not for traders, this is not for,
Correct.
flippers.
Right. Yeah.
Right? I mean, if you go long on pound and hope to flip it in a week, well, you may get lucky, you may get unlucky. I mean,
Yeah. So that's what you're not looking at from the trading standpoint, but more from the investing standpoint.
right. I mean, even if you consider it a trade, it's a long-term trade.
Correct.
It's a super positional trade.
Yeah. But it's anyway, it's trying to slowly catch up, the pound and the euro.
Right.
So, therefore, if you look at it that way, and obviously the dollar index has to go down because the significant percentage of
Right.
contribution is there in the dollar.
Of course, I mean these are the big ones.
The euro,
apart from
yeah,
the Japanese yen.
yeah. So
Well, the Japanese yen is a different story though.
correct.
Because the interest rate environment, the deflationary environment in Japan is all very different from Europe.
Correct.
So I would still say the yen carry trade still holds.
Right.
Which is go short on yen perpetually and maybe hedge it, maybe not hedge it. I mean it depends on your risk appetite.
Sure.
So I would not include yen in this European play, inflation play.
Okay.
Yeah.
Fair enough.
So if we look at the European inflation and what's driving it, right? It's energy. I mean, it's it's the cheap money of the pandemic period, of course, that's driving everything. But to be more specific, it's energy, which could be natural gas, which could be crude, and or in general the commodity index, right? If you look at all three of them, for example, we're looking at natural gas right now. So this kind of peak has only been seen 4 or 5 times in the past. And every time there's been a quick decline, including this time, and the peak is long past. Right?
Right.
Again, we're not talking any math, we're not talking peak detection, outlier detection, nothing. But it's visually clear.
Yes. Self-explanatory.
Right. So that's about natural gas. Let's also look at crude and commodity index. Again, if you look at the commodity index, right? The bottom was during the pandemic.
Yeah.
Right. And the recent top is just before the monetary tightening started. And these are clearly visible in the chart. And looks like it has turned the corner. Right. I mean, we're nobody to say, it's not going to go back up again. But going by historical trends, commodities seem to, trade in a channel. They call it commodity channel index. Right. I mean, again, technical indicators aside, if you look at pre-2020, there was a lot of flatness, and then there was a crash, and then there was a gradual rise, and now there's a gradual fall. Right, and we expect that to continue.
Yeah.
Let's look at crude also. Same story, right? Peaks like this seen, 2 or 3 times in the past. Hasn't lasted terribly long in the past, right? Except for one time, where from 2010 to 15, or maybe 11 to 14, it was peak all the time. And but right now, again, the peak seems to be past. And given the fundamental changes in the energy economy of the world, from electrical vehicles to hydrogen to whatever else is happening, right? Can there be a sustainable bull market in oil? Very, very unlikely. Can there be a spike again? That's possible, whenever geopolitical tensions or whatever else rises again.
Yeah. I mean, that geopolitical is set aside. If you look at it from the alternative fuels, alternative to fossil fuels. I mean, that is actually, going quite in a good pace. I mean, all over the world. It's not just one place. So, I mean, it's gaining a lot of traction. In fact, even the Saudi world, the Arab world also are thinking alternatives on this.
Exactly. And I mean, thinking of a sustainable oil boom again in terms of price is, you know, is like thinking of a tulip boom again, right?
True.
I mean, to me, it's as ridiculous as that.
Yeah. Yeah.
Right. So yeah,
Fair enough.
and let's also look at how all this is played out. Let's look at UK as an example.
Hmm. So
So if you look at UK inflation, right, it's again seen, a peak as big as this a very long time ago,
Hmm.
right? This was like 1989 or something.
Yeah.
But smaller peaks were seen 2 or 3 times midway, much smaller, right? And this is the biggest peak after 89. And again, that seems to be tapering off. So if you look at the data month on month, there's been a deflation in the UK, right?
Yeah.
And, year on year, again, it's down from, double digits to single digits. I mean, that's not saying much, but even if it's in single digits, 1 year down the line, is it going to be easy to beat this base effect, given the tight monetary policy worldwide in America, Europe, and UK, right? That's very hard.
True. Yeah.
Okay, so this is how we play the European inflation game. You could go long on European currencies like the euro, the pound. You could go short on energy for the long term, I mean, fossil fuels, that is, or fossil fuel companies, that is, if you like. So that's another way to play this.
So that's a good point that you made. I think um, let's move on to the Ukrainian war.
Right.
Do you think that it's over for the markets already? I know it's still going on. It's been a
Right.
year, and then I don't know how long it's
Right.
going to go on. Geopolitically, it's not over yet.
Yeah.
But for the markets, so what do you think?
Absolutely, fantastic question. I think it's very important to separate the geopolitics from the markets.
Yeah, absolutely.
Because I mean, there could be tons of nonsense in geopolitics which markets don't care about.
Yes.
All right.
Yeah.
So I would say this: unless there is an escalation in the war, it's over for the markets.
Correct.
And I would say that the war is over for markets with a 99% confidence interval.
Correct.
I mean, what's that? What's the confidence interval? That's too much of math and statistics and flies above my head and many people's heads.
Yes, of course.
So
Yeah.
we don't want to be talking jargon here. But I mean, markets have seen the worst of it. I mean,
Correct.
we looked at natural gas prices, right? What was the peak? It was like $10, whatever.
Yeah.
Now it's $2.50.
Yeah, absolutely.
So the worst is over
Yeah,
for all practical purposes.
True.
And the only way there's 1% outside of the 99% confidence interval.
Right.
Again, we would call it something like tail risk in jargon, but again, jargon later, not for now. So can things go out of control? Possible, but again, probability is extremely low.
Correct.
Right? And it's not realistic. Like, for instance, if the Russian rulers try to escalate this, from a geopolitical perspective, they would be risking their own power.
Yes, of course. Yeah.
Right? And the staying power of Russia is not infinite given their dependence on oil, natural gas, rest of Europe as a market and stuff. So the staying power is limited.
Yeah.
But the staying power of those who are supporting Ukraine financially and militarily is infinite compared to that. right?
Yeah. Good.
So I would say it's over for markets with a 99% confidence interval.
Okay, that's a fair enough. I think we have seen that already. In fact, a couple of months back.
Right,
It's not now.
right,
So in fact, the market has already stopped perceiving the risk associated with the war already.
right.
It's corrected itself, factored in already. We've seen that. That's a fair point that you made. I think let's move on to our next thing is the emerging markets.
Sure.
Okay, this is where the major challenges are there, and then we will have to look at it in a different way. So how do you think the emerging markets are playing this scenarios?
It's a very interesting story and it's a mixed bag. Right. I mean, not all emerging markets are equal,
Correct. Yes.
number one.
Yeah.
But they all face similar risks because of monetary tightening in the West
Yeah.
and inflation, deflation, whatever happens in the West does affect emerging markets,
Yes.
but it affects each of them slightly differently.
Correct.
Right? That being said, I think emerging markets is not easy to play to begin with. Right? For many reasons. Let's just look at monetary policy. Right? If emerging markets tighten their own policies, that is, increase the rates, it's a hit on the local economy,
Correct. Absolutely.
the money supply.
Yeah.
If they don't, it's a risk of capital flight.
Correct.
So it's between the devil and the deep sea,
Yeah.
right?
Yeah.
I mean, it reminds me of this interesting video that Richard Attenborough shot on BBC Earth.
Yes, I think we should play that. I mean,
Yeah. So it's about a bunch of crabs, a community of crabs, if you will,
yeah.
right? Who grow too big for their shells,
Correct.
which could be termed inflationary in some way.
Right. Why don't we play that? I think we should play that video.
Yeah, let's.
CAT to GDP.
Right. So this chart essentially shows, how the current account balance of G20, some of the G20 countries, has changed year on year. So this is not absolute numbers, it's just year on year changes relative to, let's say, December 2021.
Correct. Yeah.
Right. So if you look at this, right, US, UK, they've always been CAD, current account deficient countries, and that's okay, right? And that's generally okay for developed countries. But if you look at India, if you look at, South Africa, if you look at the Euro area, if you look at, Euro area, which is, which includes a lot of countries, not just the developed ones. If you look at Brazil, so there's been a change, right?
Yeah.
And there's been a change for the negative. And that's not okay for emerging countries in general, because as we discussed, right, it has implications on the currency, it has implications on the way their central banks behave and stuff. So yeah, we just wanted to bring up this point of, the rich country versus poor country divide from the current account balance lens.
Wonderful. Yeah.
Let's
Get on that.
right. So let's pause this here and let's go back to.
Well, I think we've discussed many things from our point of view.
Sure.
Now I don't know how ChatGPT is going to think about it.
Right.
We don't know.
Let's do our
Yeah.
next interview with ChatGPT.
Of course, I think it's a good idea. We probably need to do that and see if our views.
But is it a Google killer? What do you think?
Well, I don't think so at this point in time.
Okay.
Okay, but Google in its current form, maybe have a little bit disadvantage.
Okay.
Given what Google can do, because they have enough capability to create similar to ChatGPT, and they already can leverage what their own data and chat and all that, and I don't think so Google should have any problem. Okay, but if you look at Google search as such from the application standpoint and the ChatGPT standpoint, maybe the way the usability of it might change in future. Not at the moment. I don't think so. It will be a killer.
Okay.
But it would surely, Google have to rethink about their strategy or they present their.
Sure.
Yeah, that's what my view is. I think. So.
I would say this. Right. I think it could potentially dominate the PC market. But to dominate the mobile market, they're going to need either Google or Apple.
Right. Yeah. Yeah.
That's my high level view. I mean, I actually try to play around, with some simple game theory constructs like game of chicken and.
Exactly, your point is right. I'm just saying that Google per se as a company is a different part. I don't think so it will be a killer of that.
Right.
I'm saying talking in terms of the application, Google search as such.
But that's the cash cow. I mean,
that's the cash cow. But the Google have to modify it a bit because there will be a new generation usage and usability, and ChatGPT is contributing in a different way.
Okay.
So Google has the capability. Okay, they somehow kind of have to work this.
So that's not it's not a Google killer yet.
Yes, absolutely not.
But can any of its clones, like I've been hearing about this company called C3.ai.
I mean, we can't predict anything. I don't know what's in store, but Google is too big at the moment. Too
big to fail.
Yeah, the differentiator from ChatGPT can be easily replicated by Google. And I mean, end of the day, what is it? It's all about data and the capability to train, right? So I think Google has both. So I don't see any.
Okay.
Maybe for short term there could be some sort of a glitch, but not in the longer term. I think Google would come back strongly on that. I feel that. Yeah.
Alrighty. Cool.
So I think we should check what this ChatGPT says. Anyway, we should do that. And then
so let's make ChatGPT answer our next session macro questions.
Yeah, that would be wonderful. I think we'll do that.
Right.
Yeah.
Brilliant. On that note, happy investing.
Happy investing. Thanks for viewing our content. Keep supporting us, subscribing. Thanks a lot. Yeah. Bye bye.